The Federal Reserve has a new instant payment service called FedNow. The central bank has also denied that it's tied to any digital U.S. dollar initiative. Joining us now is Brookings Institution Senior Fellow and former Deputy Assistant Secretary for Economic Policy at the Treasury Department, Klein. Welcome to the show, Aaron.
Hey, thanks for having me on.
Thanks for being here with us. Now, FedNow has been a big talking point over the last few months. Tell us what FedNow is, what it's used for, and what the everyday consumer out there can expect from a service like this being launched to financial institutions.
Sure. So FedNow is the update to the Federal Reserve's clearing system, which is called the Automatic Clearinghouse, or ACH, which has been run on 50-year-old technology. The old technology was kind of like a laundry machine, a batch system where you had to put everything in and the payments were all cleared together. So they were done in a couple of batches throughout the day, ending usually in the early afternoon East Coast time. The result were payments that took anywhere from 1 to 3 to 6 days, depending on if there were holidays or weekends. FedNow is like a streaming service. It's a real-time payment system that goes straight all the way instantly, 24/7, 365. It's what the rest of the world developed 10, 15, 20 years ago, depending on what country. So this is just a modernization of the Fed's back-end payment processing system, which has been sorely needed and long overdue.
Does this change anything with things like foreign exchange? You know, as an old foreign exchange trader, I was going to say, as an old foreign exchange trader, we always had to wait 2 days for everything to clear. Spot was actually the days were 2 days out. Will that have any effect, or will it eventually have any?
No, this is a retail payment system. This is not about trading an institution. At some point, it may be helpful for the Securities and Exchange Commission as they try to go to T+1 and lower the amount of actual settlement time between when your stocks trade. But this is really about retail payments. It's about how long it takes for your check to be available, for your funds, for your paycheck. Most people think direct deposit is instant. They couldn't be more wrong. When you see a direct deposit from your employer show up on Friday, that money probably left the employer Tuesday, and it sat in this netherworld of payment plumbing for 3 days. So it's really a retail system. And unfortunately, it's going to have a pretty limited effect. It launched with, I think, only about 36 banks and credit unions signed up, and then about another 20 ancillary service providers. So it was a pretty tepid launch, which makes sense because the industry gets a lot of money and profit from the delay in the existing payment system.
Yeah, how big was the biggest institution that signed on?
Well, some of the very large institutions signed on, but just because they signed on doesn't mean that they're using it for your payment. See, part of the problem is the Fed has regulatory authority to require money be available sooner, and it doesn't use that authority. It sits on its hands, even though the laws required them to speed up payments for decades now. Some people like myself have hypothesized that the Fed has refused to follow the law requiring faster funds because they didn't build the system. Other private systems were built, and the Fed was afraid that if it followed the law and did its job, it would actually move volume away from its own payment processing system to others. So now the question is, will the Fed follow through with its legal mandate to make funds available faster for consumers now that it's built its own infrastructure? The way to think about it is, you know, if Blockbuster had been in charge of regulation involving streaming, would we have had Netflix? I don't think so. Now, Blockbuster eventually built their own streaming system. They were too late because it was a competitive market. Now the Fed's built its own system. Maybe we're going to finally get faster payments in America.
Now, I said this in my intro, but some people are saying that this new system could lay the groundwork for a CBDC. Do you think that's what's going on here? I have to note that the Fed has said that this is not what's happening. But what do you think?
Yeah, no, this is not what's happening. This is two different conflated ideas that have been joined together. I don't fully understand it. CBDC is nothing new. America has CBDC. We have commercial bank digital currency. Every swipe you make is a commercial bank digital currency transaction. The idea of swapping that first C of commercial for central to create a Federal Reserve digital currency is a pretty radical idea that the Fed has been studying. The Biden administration's Justice Department, I think, kind of put the chill on that a little bit by pointing out the Fed didn't have legal authority for that, and Congress seems, at this moment at least, unlikely to grant them that authority in the short term. But this plumbing update kind of has nothing to do with it. It's kind of like saying, you had a problem, you brought in the plumber and put in some new high quality Japanese maybe toilets in your house, and that sets up a possible renovation to add a third floor. The two things really don't have that much to do with each other.
Speaking of toilets, crypto, how is it affected?
I love talking
ultimately?
Toilets.
Yeah, I can imagine. Sure, who doesn't? But how is crypto affected in all of this? In the sense of, one of the arguments of why you use crypto is that it's quick. It'll be quick and seamless transactions, though it's been neither one if you've actually used it. But is this something that takes a little bit of more wind out of the sails of the potential of crypto?
So it depends how you view that argument, and you nailed it. I couldn't agree more. Crypto had a lot of hype about settlement speed, and it's just failed to live up to that. Visa, Amex, MasterCard process way more transactions per second than any blockchain I'm aware of. And so the idea that crypto was going to be this faster instant settlement was definitely one of the main talking points I heard about crypto for a long time, and it failed to live up to that. Now, the Fed has a faster system. So to some degree, that takes some of the wind out of the sails of the talking point. But if you've been paying attention, that talking point hasn't been realized in its own on its own technology. So it's hard for me to understand why those two things would really play. What I do wonder is if in a few years from now, if there's still such tepid take-up on the Fed's real-time payment system, if that's going to cause the Fed to take the wrong impression and say the demand for real-time payments isn't there. Because we know that slower payments cost billions of dollars in late fees, overdraft fees, check cashing fees, payday lending fees. And we know that the banks that have on credit unions and fintechs that have provided people faster access to their own money have seen decreases in overdraft and other fees. So we know faster payments works in solving problems faced by Americans living paycheck to paycheck. Whether those problems are the merit, the concern, and policy attention of the Federal Reserve is a different question. But the argument for crypto that it's faster than existing payment systems has been one that I've struggled to see in truth and reality for years.
Any of us who have owed money to a bookie knows this, that instantaneous payments is important. So when it comes to the consumer, though, what will they see affect them in the meantime?
Very little. FedNow had a quiet. It was very hyped. It was said that the Fed was solving this problem, and then when it was rolled out, it was kind of quiet last week. In part because they didn't have that many institutions. So I don't think the consumer right now, you can't go into your bank and say, please send this by FedNow, right? It's a back office system. Mm-hmm. So until the Fed does a little more regulatorily to require that, the consumer will probably see not as much. You'll see maybe some banks start to offer it. To the retail. It depends at what cost. Some banks already offer expedited funds availability, often for 1% of the deposit, which I think is a pretty steep price, but it could be cheaper than the alternatives.
I guess drawing from some of the challenges you outlined there in terms of, fees when it comes to slower payments, getting to the end user, do you think that if the crypto infrastructure was built out and if we could get these faster payments that this industry has promised for so long, it actually does solve the problem of having these middlemen chip away at fees for the end user?
Well, I mean, it depends because the middlemen are chipping away at fees and they're also providing services, right? So, when you see something like an overdraft, it's settling a payment when funds aren't in your account. Crypto has said that it won't do that. Part of the promise is you always know that the funds are available in your account. So, there are a lot of ifs in that question. I think crypto has put out a lot of promises to solve real problems and identified true pain points, often pain points that the existing payment system have ignored. The Fed's old system was really predicated on the idea that everyone had $1,000 in their bank account and could afford to wait days for their money to be available. And that's true for, the wealthier half of Americans. On the crypto side, I think crypto would do better focusing on their own technology and their own proof of identity and proof of value and proposition and proof of money in that. I will flag one final point. When the SVB and Signature Bank and all those banks were failing in March, the Fed's actual payment system was slow. And in fact, one of the banks almost failed during the day because at 4 p.m. the Fed closed its FedWire. It's a different payment system, one that's more involved in the FX and other trading that you described. It almost caused the bank to fail same day. So a faster back office for the Fed can be a more stable financial system. Why is this important to crypto? Well, we know that had SVB failed and not been bailed out, Circle would have lost a lot of money. And what impact would that have had in the stable coin system, and how would that have reverberated through the broader system? We don't know.
Well, 4 p.m. is the time everyone needs to get out of the office and get home, beat New York traffic or DC traffic, so you got to excuse them.
Well, sure. And 4 p.m. in New York is 1 p.m. Pacific time, right? It's not like 4 p.m. in each time zone with these old antiquated systems. So, what occurs after 1 o'clock, right? When the Fed was founded, the San Francisco Federal Reserve had the same share of the population as the Minneapolis. Today, it is about 10 times the share of the American population. So, what's changed in 100 years?
That teaches them to live in California.
All right. We are going to leave it there. Aaron, thanks so much for joining the show this morning.
Great. Thank you very much.